What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. In today's episode, we're going to talk about that broad sell-off that took place and, well, are we getting ready for yet again another bounce? Let's get into today's show. All right, everybody, welcome back. So first and foremost, what happened to the yields? They came off. The 10 and 2 curve gave back a little bit of what previously happened after the FOMC minutes, so it did flatten out there. The TLT did see a little bit of a pop there, so that was good if you were able to take a trade with the TLT. Now, there is some interesting news happening after our session, which we will get into momentarily. What happened to oil? Oil came off slightly there today too, as there's still been these tensions with Ukraine and Russia. Gold rallied quite hard, hitting above $1,900 an ounce for really the first time since June. So I find this kind of interesting here. So there's still risk with this whole Russian military action in Ukraine. And what I find interesting is whether or not if gold is rising really rapidly here because of those tensions, because it did start rising very rapidly when that news was basically dropped. Now, what's interesting, though, is there's still tensions there, and oil actually came off a little bit here. So perhaps gold is starting a stronger move breaking out of this, but we're going to have to wait and see. We need it to hold really this 1880 level to 1860 level, this breakout zone, a little bit longer to confirm that this is actually a real breakout. Bitcoin had a very, very horrible day, along with Ethereum is down just over 6%. And we haven't seen a move like that since, in January right here of 2022. So we'll see here if it pairs some of its losses. We talked about NVDA yesterday. This is actually the chart of NVIDIA that we use. And we basically said, hey, if NVIDIA shoots up, that's going to probably help the markets. If it goes down, it'll probably put weight on the market, given that it's such a high market cap stock in the S&P 100 and 500. It's one of the top 10 there in that cap-weighted indices. So what happened? Well, after our session, it was down slightly, even though it reported well. And you can see here, bam, we just got crushed to the downside. It finished down 7.56%, and the market did follow that path as well. Now, what I find interesting here is there's a lot of oversold conditions in the marketplace, which we'll discuss here in further detail, but there's still actually a lot of volatility being priced in for NVIDIA for a potential move down to around 236 to as high as 254. Now, if these overextended areas in the indices start to rally, we might actually see this come up and try to, get a little bit of steam come tomorrow, and I'll talk about that here momentarily. Let's look at the market dashboard. So what were the top performing sectors? Defense, consumer staples, and utilities. Those are the only ones positive on the day. Meanwhile, the big dogs, Y and XLK, those were the laggards of the day. And if you don't have technology and consumer discretionary playing and you're down almost 3% per sector, that's going to obviously put a lot of weight because there's some big cap stocks within those. If you take a look at the left-hand side, Dow Jones was down almost 2%, 622 points. S&P 500 down 2.12. NASDAQ was almost down 3%. So a lot of red on the day. This probably scared a lot of people out of positions. Now, there was something interesting that happened after hours today. U.S. said to accept holding a talk with Russia's Foreign Minister Lavrov next week. Russia proposed dates late for next week, and the futures market here, NQ, did respond positive to that. So perhaps we do work off some overextended levels coming into tomorrow's trading session. We don't know exactly, right? This news has just been dropping back and forth, positive, negative, negative, and then it's been a very volatile and wild ride, but this is at least somewhat of a good sign, and at least that's how the market's anticipating at this current moment. Now, if we hop into the S&P 500, the SPY, where are we in the risk range? Well, we have the higher level here, the lower level there. Where are we? We're pretty much right in the center. So we're pretty much unchanged for the week, but we just seen massive volatility, right? Huge move up, trend sideways, come all the way back down. This is where you just got to be very careful. We have one more trading day left in the week, and I believe next week we're going to have a shortened trading week due to the holiday. Look at this, can go it can go up or down right now at this particular point in time. Yesterday, my bias was to the upside, and I basically stated in the video that if we get a gap down, I'm not going to really be that to me wouldn't look too good. We did get a gap down, subtle rally, and then we started selling off here. Now, tomorrow, being that it's so overextended to the downside, I do still have a bias that we're going to try to move up, potentially try to even tag that 200-day moving average or close above it. So the bulls have some work to do come tomorrow. Now, if we look at the 15-minute time frame, you can see we're overextended with a positive divergence. We're wedging, so we're still below this 5-day moving average. So it looks like it could come gap up. So that's what I'm going to be looking at tomorrow going into the early trading session. If we take a look at the Qs, obviously just what a ripper to the downside, down almost 3% on the day. Look at, this, it looks like a period of distribution. It looks like a bear flag. You can call this a trend line, right? We've acted as support, support, support. And now we're right basically back there at that specific line. If you look at the 15-minute time frame, and by the way, right, we're right back in the middle of the risk range. If we look at the 15-minute time frame, where are we? Well, we're overextended to the downside once again. So to see a relief move out of this makes sense. Now, we have a declining 5-day moving average, so that can hold as resistance. We have this gap above us too as well. So be on the lookout for a gap up, potentially come tomorrow if this news still holds to be positive, right? Like just take a look to the left of the screen, right? Trying to navigate this chop, boom, 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 boom. This creates a lot of emotion throughout trading sessions. Talking about emotion, Meet Kevin just posted this, that he took a 1,000 share position in Tesla based off of really just a news article that came out. At least that's what he states. I don't know the full story here, but what he posted was scummy Ford and GM now want to purposely throttle production to keep higher profit margins, yet our president is complicit in favoring these losers over Tesla and Elon. After I read this report this morning, I immediately bought 1,000 shares. Now, to me, I look at this and it seems fairly impulsive. If he opens up and talks more about like where his price targets are or where he's willing to cut off risk, but keep this in mind. He's worth about, in my head, what I've heard him say is 20 mil to 30 mil. So you might be thinking that that's not that much, but 1,000 share position, if we take a look at a chart of Tesla, that's not Tesla. If we take a look at Tesla, he said he basically opened it immediately at the open, which is around 925. I'm just going to call it 1,000 just for simple math, but just so you get my kind of idea here. That's basically $1 million at risk. And if he's, worth 20 to 30, you're looking at 2.5% to 5% his net worth in one trade based off from what he said, at least, just a very quick snippet of news. To me, that is highly impulsive, and I hope the trade works out for him. I feel like we can rally come tomorrow. That seems like a possibility, but just understand that these look at the candles on Tesla right now. This looks like a period of distribution. If you just draw it, it's basically in a channel. So if it comes to the lower end, you might play it to the top. But this is what I'm thinking here. It's if he entered in right here and it's already down 4% on him. You need to think from a risk to reward perspective here. I don't know if he's planning on holding this a long time or not. He's already stated that he's sold he sold everything apparently. So I don't know his plan here, but just hear me out. If it's down 4% already, the minimum really that you want from a risk to rewards perspective is at least a 1-to-2 ratio. And that would really bring us back up to around this marker right here to give us that, 2 for the reward, 1 to risk. But that means it has to go pretty much up from here all the way to here, which is around 13% straight up. Now, if it goes down further, that skews the risk to reward. That means he's letting his risk go deeper, where his reward has to be higher to kind of outweigh that risk. I don't know what he plans on doing specifically. However, overall, Tesla's been holding up quite well. It's just very, very volatile. If we take a look at a couple key levels here, obviously 950 is a very important level, and the bears have been defending it. The bulls have been holding it as support multiple times, but right now that's in the bears' favor. Still above that 200-day moving average here. So it does look like it could come down lower, but being that most things are oversold, I can see a bounce coming up, and I don't know what he's going to do. This might have put a lot of pressure on him right here, and maybe he might just, if he gets back to break even, might get out. He might hold it for a long time. I don't really know his plan, but I'm bringing this up because I don't want people to just become impulsive and just buy things based off of a very quick news article. It can work out in your favor, but if you do it long enough and you risk 5% of your net worth in a trade based off of this, and you do that long enough, there will come a time where not only will you have a down day like this, but you'll have a gap down and it'll be like 15 or 20% on you, right? It happens time and time again. So you need to be very mindful of entry points and risk, especially not only that you might understand the company completely, but understand the market conditions right now. The market conditions, one news headline is thrown around the market. So it's a very dangerous time to be doing those type of trades. If you take a look at Tesla here on the 15-minute time frame, it's really just channel bound right here. So, we have support at around 850. We have resistance at about 950, and we're basically in the middle of that channel. We have this volume shelf profile right here. Okay, so to come back right up into this area, there's going to be resistance right back up in here, and that can act as a magnet, so we can potentially see price come right back up to 920, probably no problem in maybe tomorrow, maybe next week, I don't know. It's very hard to determine, but we are overextended on the RSI too. So now, like if you didn't just get in when he said to, now you might look at this tomorrow and hey, you can catch a little bit better of a position if we start ramping up, or if you want to do an intraday trade, and or if you just believe in the company and you want to hold it long term, you got to look for better entries. Now, year to date, if we take a look at the sectors, I really want to quickly go over this. XLF has been coming off quite a bit, right? It's still up positive on the year, but understand it's been raising because of that 10-year yield. Now the curve is starting to flatten. Financials are coming off. And we've been talking about that. We've been showing some charts. Energy still is a very strong player, up 23%. We'll see if that starts to back off, because if the 10-year yield wants to come down, remember the relative strength between the S&P 500 and energy comes off when the 10-year yield also comes off. So we will see if that relative strength backs off too. What I want to point out here is the third player right here, consumer staples. That is more defensive. This is year to date. It's only down 1.58%. So this is something to pay attention to. It's more defensive, and it's starting to creep itself up. If I look at a chart of XLP, this is one I shared previously. It is in this broadening wedge pattern. Price is trying to tighten up right here. It's getting back above that 20 and 50-day moving average. RS line, which is relative strength between this and the S&P 500, is strong, hitting a high. So to me, this looks like a clear opportunity this is going to be something that's going to be playing out here within this quarter and next quarter. And this could be a very strong performer as long as these levels kind of hold right now. And today it was up almost a percentage point. So it's looking good. Can it back off a little bit tomorrow and continue to tighten up? I would imagine it could definitely do all of that. So just keep an eye on basically breaking above that 77 area for consumer staples to potentially keep going. If you're wondering what's been playing out very well in consumer staples, it's been tobacco. Tobacco companies have been doing very, very well. That's the top industry in consumer staples, as well as food products. That is all I got for you, everybody, on today's episode. Like I said, are we getting ready for a rally come tomorrow? Well, like I said, one more time, based off of that news that just recently came out in the after hours session, it looks like the market's responding good to that. We will see if that has some follow through. Just be very mindful that we're just right now in the middle of a risk range on both these indices. They're getting overextended on the 15-minute time frame to the downside. It looks like definitely that we can start to rally or try to work off some of these overextensions, but that doesn't take us home set free. We're still within this volatility channel right here. All right, everybody, have a wonderful night. See you later.